Okay folks, welcome to another edition of Index Markets from Magnetic Trading. So this week we're going to be covering what we traded in the markets last week via our advisor service. Remember, these are the trades that we take on our own fund, and we then send the alerts out via a simple buy sell instruction to our clients via a phone app. So we'll see what happened there. We're also going to cover and train you on one of our live trades that we took in our live trading room. And finally, we're going to give you a wrap up of the markets and what to expect this week, in particular from the FTSE 100 market. So last week we had two trades via the Magnetic Advisor Service, and both were winners. Both were taken on the FTSE 100 market. And what we're going to do now is we're going to delve into the charts, and we're going to show you why and how we took this trade for the FTSE last week. Okay, so the trade we're looking at is on the 6th of August. We're going to look at this one. Our entry was 6038. We had a stop at 6020. We ended up coming out of the trade at 6053. So let's go and have a look at this one. Okay, so this trade was taken, again, it's a FTSE 100 market, and it was taken in our live trading room webinar. We were using a 1 minute chart. So if you remember last week's video, we were talking that we like to use the 1 minute chart on the FTSE because the FTSE 100 moves slower than other markets like the Dow, which is the American Wall Street market, and also the DAX, which is the German market. So the open of the market was here. This is the first 1 minute candlestick. And what we were looking at before the market even opened was we wanted to see the market move down to around 6038 to 35. And we would buy there, and we would have a stop below 6020. The reasons behind this trade were as follows. There was an unfilled gap left on the FTSE from the day before. So an unfilled gap was basically where the FTSE had closed from a previous day. The market had not revisited that area. So it left a gap in the market, and we expected the market to come down and fill that level. And then because the market's still long-term overall bullish, we were using that as an excuse to get in with a very favorable buy in the market with a nice small stop. So we bought pretty much 4 minutes after the market opened at 6038. We had our stop at 6020. The market then consolidated a little bit. I was actually happy with the trade, but we decided to reduce our risk to just 0.5% once it hit entry, because it was forming a bit of a consolidation range, and if it had broken down, then it would have hit our stop pretty quickly. So we reduced our risk to 0.5, but in the end our analysis proved right, and the market moved up, and we came out of the trade at 6053 here for a nice winner. And what we said is that clients could actually run some of the trade up to the 6075 area, 6075 to 6090. So they would have made actually a bigger profit on that particular trade. So again, the trade was linked to an unfilled gap, which we used as an excuse to buy. Also, the long-term trend is up, so we expected the dip or retraces in the market to be bought on the FTSE. Okay, so FTSE analysis for the week, 6040. So below that level, we need to be a little bit cautious on the FTSE if on Monday we're failing to get much traction above here, because if we get some solid end of day closes below 6040, then there is a chance that the FTSE can move down to 5800. So keep an eye on that one. If, however, we start getting some nice traction above 6070, then 6200 is a target on the FTSE. We actually have an unfilled extreme gap up at that area, and it is a target for me. So I'm still bullish on the FTSE. I still think sell-offs are good value to buy. I think the FTSE is undervalued compared to other global market indices, and I'll be looking for favorable buys going into this week.